Hello everyone, my name's Crispin Murray from Pendal Group. I thought I'd take the opportunity today to share with you our thoughts on the current market environment and how we at Pendal invest and manage money on behalf of you and your clients. One of the attributes we believe in is being upfront and transparent in our views. If I was to summarize the current situation, I think it represents perhaps the greatest challenge for investors in many years, but also it presents some of the greatest opportunities we have seen. And this is because we've got a combination of both a really bad economic situation with perhaps the greatest policy stimulus we have seen. And overlaying this are a huge health challenge and also substantial technology change. And all in combination, this is changing the way consumers and businesses operate. So this leads to three levels of uncertainty: economic, industrial, and corporate. And we believe that the more uncertainty there is, the more mispricing in the market there is, and that is what creates the opportunity. We also believe that this environment plays to our strength. We have a strong organization, we have a real breadth of resources, a lot of experience across many cycles, and strong corporate relationships. When it comes to investing, there are two key questions you need to answer. The first is how you make money for your investors, and the second is what is your competitive advantage. Now, when it comes to making money, we believe that anticipating change is the key. Investing is about what happens next. When it comes to competitive advantage, ours comes from an information advantage. We have a large team with a real focus gathering primary information. We think of the team as being similar to investigative journalists. We have a lot of meetings. And then the other thing from gathering that information is using it to make good investments. We believe in a culture, not of commentating, but of actually thinking and investing. You can see there are three pillars to delivering this. The first is the business model. Now, we are an Australian listed company. We are independent. All the staff are shareholders, and we're very much aligned to our investors. In addition, we have a dedicated management team, which means there are no distractions for those investors. They can get on with the job of identifying good ideas. The second pillar is the team, the people. We've got 18 people in our team, Australian equities, 22 years average experience, 14 years within the group. So this means that they understand market cycles, they understand the industries they're looking at, and they have a huge list of good contacts. And it's that experience and understanding that is critical at these types of points in the cycle, because it's remaining calm, focusing on the controllables, identifying opportunities that comes from that is the thing that will make a difference. The third pillar is process. Now, we've spoken about the philosophy of identifying what's going to happen next, because we believe that you make money when something is changing for the positive in a business and that the market has not realized that and it's not yet in the price. Now, when we do this, we need to then drill down into 5 key factors that we watch incredibly closely. I want to highlight 2 of these. The first one is business innovation. Now, we take a company like Xero, which is the cloud-based accounting software for small businesses. This is a company that has really been a leader in the industry in driving penetration globally, and we believe it's got a product suite that is still not fully appreciated by the market that will allow it to both drive penetration and also to increase their revenues from their customers. So that's a good example of where innovation can drive opportunity. The second category that I'd highlight is the self-help category. These are companies that are doing something themselves to improve their position, and often it comes in the form of cost and productivity. And Santos is a great example of this. You know, we're in a tough business. Oil prices are very low. They are a low-cost player, a good balance sheet. They're very proactive in terms of how they manage capital, and we believe that will hold them in really good stead, particularly if you start seeing the economies improve. So it's the combination of all these factors that we believe have allowed us to deliver strong performance over the long term. We've highlighted our focus fund performance. This is our concentrated best ideas portfolio. It is the basis of the SMA. And what I'd highlight, not only has it been able to deliver very strong performance, but it's also been very consistent performance, and it's been doing it for a long time. So there's 16 years that this team has been running this product. It's been through many cycles. It's been able to be very consistent, and even when there's been periods of underperformance, they have tended to be limited in terms of the drawdown, and the recovery of that performance has happened quickly. If I turn now to our view on the market, we believe we are in the fourth phase of this market environment. We've gone from the focus just being on China to an indiscriminate sell-off, followed by a strong bounce. And now we're in what I would call a protracted discovery phase. How bad will the economies be? How will companies fare? This is a time when information and insight can add a lot of value. You'll see that we identify the key swing factors. We all know what they are. I mean, the critical issues is the ability to restart the economy, how quickly and sustainably it recovers. And to better assess this, we've presented 4 scenarios. So the first scenario to consider is the potential for a rapid medical breakthrough, whether that be a vaccine or antiviral treatment that allowed us to deal with the severity of the virus. Now, while these are progressing, if there was a dramatic breakthrough, it would clearly be very positive for the market. And that would happen well before the availability of those treatments, as it would impact on confidence. Now, this is a low probability scenario, but it does have a very significant potential effect on the market. So it is something that needs to be aware of. The other 3 scenarios are less constructive, but are more likely in terms of outcomes. Now, the most positive one of these is the potential for certain countries such as Australia, New Zealand, to actually eliminate the virus and then effectively close down their borders and remain sort of separate until a vaccine was available. The middle scenario is a sort of more managed mitigation, which allows the economy to ramp up, but perhaps not to where it was before. And the third scenario is the most negative one, which is that we get waves of reinfection, which really impact on the economy. Now, recently I was talking to some of the academic experts who've been working with the government, and it's just worth noting that the difference between an elimination strategy in Australia and a managed mitigation one, that could be worth $2 to $8 billion a month just for our economy. So it does highlight the variety of outcomes that we could see. Now, while we spend a lot of time understanding the developments and risks on the medical and economic front, the reality is we know it is really impossible to predict what's going to happen. And what we need to do is weigh up these different scenarios and position the portfolio for that. Now, it's important to stress as investors, we're not going to be taking binary risks with our clients' money. We invest where we have insight and where we expect to get a good return. So we're positioning our portfolios to find the best stocks for those different outcomes. And you'll see the categories of stock that we're considering. Firstly, recession protection, stocks which are policy beneficiaries, companies that are good businesses, which we expect to sort of bounce back strongly when the recovery occurs. And then finally, those recovery plays, the stocks which have been discounted the most heavily because they're most immediately affected by the crisis. Now, we're looking for different attributes in each of these categories in terms of the best stocks, but ultimately they do boil down to those factors we identified earlier, which reflect in terms of the quality of the industry structure, but also the quality of their management and their ability to respond to the environment we're in and their ability to allocate capital well. So what are the companies that we've identified that best fill these different categories? We've identified a range of these. If we focus first on the defensive side, we've identified Amcor. This is the global packaging business. It's the number one player in the world. It's got great technology. And what they're benefiting from is that consumers are increasingly appreciating this safe packaging as they focus on health and hygiene. On top of that, this is a company that the end products are very much essential products, and therefore revenue is holding up extremely well. So this is a great positioned business for a more challenging economic environment. If we then look at the beneficiaries of policies, we've identified Seven Group as a great example of a company that we think is underappreciated. It's got two aspects to its business. The first one is very much providing mining equipment for projects which are largely occurring in the Pilbara. And so this is an area that we're seeing very strong demand. Iron ore continues to be well underpinned by particularly Chinese reflation, and therefore we see that capex holding up well. On top of that, Seven is a big beneficiary of any infrastructure spend that we're going to see in Australia, and we do believe that will be an important part of the policy tools that the government use to kickstart the Australian economy. And then on the side, which is really recovery plays that have been hit harder in this market downturn, we've identified Santos really as one which we believe is really well placed for any signs of improvement. Now, this is the low-cost player in the energy sector. It's going to be in a great position to withstand any continued downswing in oil prices. It'll be one of the last companies standing. And in the event that we actually see demand beginning to pick up as global economies begin to turn the corner, oil price recovers, they will be in a great place to take advantage of it because of that low-cost structure, and also because they've got a number of incremental projects that they can actually allocate capital to grow their earnings. So these are the sort of companies that we're looking for, where we're taking the insights that we're getting from having the contacts with these companies and understanding their position within their industries, and identifying that the market's not appreciating the opportunities available to them. So I hope that's given you a taste of how we invest at Pendal. And I think it's really important to just reiterate those points. Yes, this is a really uncertain time for investors, but that also means that it's a time where there are a huge number of opportunities. And I believe that the experience that the team at Pendal has can deliver on those opportunities for you and your investors. Thank you for your time, and I wish you all the best.